Here, your host of the breaking news so you don't break the bank. Welcome back. We've had some sicknesses in the family, myself included, and so we're back with an update, catching you up with some of the trends and things that are happening in the world of finance today. So the first article is very self-serving, but there's an article talking about the 9 misunderstood fintech trends affecting the future of banking. Well, guess what? I'm going to jump all the way to number 8 first. We're going to go over all 9, but we're going to jump to number 8 first because what? Oh, yeah, it's talking about me and Get Fundable and where we're headed. Number 8, financial health. So this is the misunderstood or the little known fintech trends that are happening. So I'm going to read this word for word because it really does forecast our movement into this space. It basically, the ability to manage expenses, prepare for and recover from financial shocks, have minimal debt, and build wealth. You may wonder why financial health makes a list of misunderstood financial terms. It's because the vast majority of bankers confuse financial health with financial literacy. What is a checking account, etc. And financial literacy is defined. Financial health is behavioral, integrated, and measurable. Behavioral. Remember, we talk about borrower behaviors. And will become the basis of competition in banking notes. Banking notes Cornerstone, who wrote this article. Financial institutions need to use technology to help consumers change their financial behaviors, borrower behaviors, and influence their financial decisions, right? So financial health is different from financial literacy. They think Fitbit of banking, right? So what is the measurements and what is the app and what is the things that are going to help you modify your borrower behavior so that you, in our language, become fundable? Well, financial institutions already do a decent job of promoting financial literacy as defined by having the knowledge and skills to make informed decisions. It's analogous to dieting, that we all know what we should be eating, but changing our behaviors is what is so difficult. Expect the financial fintech space to grow. Cornerstone predicts that an Amazon of financial health or a Fitbit of banking, I would input a Fitbit of borrowing, will emerge. You heard it here first. That's prophesying there is not an Amazon of financial health or a Fitbit of banking, because we are making that splash. We have the technology. We have the ability to teach, show, measure, and create positive results for changing borrower behaviors to become fundable and therefore attractive to lenders, making it a win-win across all platforms. So, and to be clear, the new financial health is AI and API driven. You're welcome. Thank you very much. And don't be surprised if Congress starts requiring financial institutions to monitor and improve consumers' financial health. Hence, the new collaboration I'm doing with FICO to build software for lenders to provide their depositors the tools to monitor, track, and improve their borrower behaviors so that they can qualify for their own credit products resident right there in the same bank. So I just rushed straight to number 8, you guys, because it really is forecasting our emergence onto this stage in a big way. Everybody who's known us for over the last 10 years, I've been doing this 30, but our traction has been gathering over the last 10 years. And right now, we are in an amazing position. We're building the software that they're talking about, AI and API driven, to collect borrower data and then give each person who is tracking online or on their phone in the app to track their borrower behaviors and know what they need to do next in order to create the most positive and powerful funding results. So I'm thrilled with this. But since we're here, let's go back to number one, and we'll cover that as well. Some of these we have discussed, and I won't go into a lot of detail, but the number one they list here of little known or misunderstood fintech trends is banking as a service. They're calling it BaaS, BaaS, where financial institutions partner with fintechs and non-financial firms to provide financial services to a partner's customer base. So imagine Chase offering a package or suite of products and or lending opportunities to an employer, let's say Chevron, for instance, right? And Chase actually has a Chevron rep there and a Chevron co-branded landing page where Chevron employees could go and look at the different banking products offered by Chase using this example. So that's all made up, but it's basically think of BaaS, banking as a service, as strategic alliances between non-financial institutions and financial institutions. The funny thing is what we're doing is once we have our suite, once we have our software established and growing in the marketplace, is to offer this exact fundability software, offer it directly to the biggest employers, put it as part of the employee benefit programs so that people can go and download and make fundability a part of their employment package. So banking as a service, buy now, pay later, it's continuing to grow, but that is still a massive trend that is sweeping purchase point of purchase sales everywhere. Now, cryptocurrency is that 68% of consumers currently hold crypto say they would like their bank to offer Bitcoin-based debit or credit card rewards. So we're still not to the point of doing broad-based lending using crypto-backed loans or lines of credit, but they would like to receive credit card. They would like to receive Bitcoin or crypto rewards for their purchases. Like now we get free flights and free nights, right? They'd like to get Bitcoin based. So now the next one is something that we've covered a lot since the most recent FICO world, which we call DeFi, which is decentralized finance. DeFi is basically having your phone is your entrance into an ecosystem of all kinds of lending and borrowing opportunities. So you can put your money in crowdfunding for and then underwriting criteria would establish who your money would be lent to in a pool. The opposite is also true, where you can crowdsource the borrowing for automobiles, loans, home loans, etc. So decentralized finance is taking the banking system out of the system and creating and basically it's peer-to-peer. Some consumers are using DeFi apps, they call them dApps, for peer-to-peer financial transactions, creating non-fungible tokens, the NFTs, and for flash loans, which Cornerstone describes as basically decentralized arbitrage. It's not likely to take off because of, and one of the ideas here is it's going to be a slow burn because no matter how big a crowdsourced fund would be, it can't compete against the Fed yet. It can't compete against the Fed or the big banks that have literally billions in their coffers to lend. And so liquidity is, or the access of funds to lend is a big concern there. Now, digital transformation is number 5, and digital transformation is really establishing a clear and open source so that the portal to banking is now your website and your phone, not the branch. So digital transformation is pulling the brick and mortar more and more out of the funding or the community banking idea and make it more like Amazon, right? You don't go to an Amazon store, you go to your portal, use the Amazon website, and that's where that leads you into this entire universe of banking. And so digital transformation is hot topic everywhere because all the big banks, the top 40 tier 1 and tier 2 banks, every one of them are moving faster and faster over into digital transformation and digital portals to access, even opening up checking accounts, which is kind of the last what's the word? The last bastion where, yeah, you can do online applications, but you still need to prove that you're, through your identity, and so a human being needs to validate who you are. They're working through all of that in order to create higher and better rates of acquiring new customers through online portals and opening checking accounts. Now, the next two, 6 and 7, embedded finance and embedded fintech. Think of these as embedded is like Toyota finances the purchase of Toyota cars, right? And so they usually don't finance Hondas, and they usually don't finance other brands. It is single sourced. Well, now fintechs and banks want to basically be a service provider for all kinds of non-financial institutions. And so it goes kind of back up to what we were talking about originally, banking as a service. But now these are embedded finance and embedded fintech is where you want to purchase let's say you want to get new windows for your house. Well, there's higher and more competition for traditional banks and fintechs to be the source of financing for you to put new windows in your house. And so they want to make sure that they have access. So non-financial institutions are onboarding fintechs, finance companies, or traditional banks to source the funds for that purchase or to finance those things. We already covered number 8, financial health, and number 9 is platform banking. Platform banking is it goes hand in hand with the digital transformation of getting rid of the brick and mortar version or representation of banking and making it an online or digital experience. And what it says, becoming a platform is hard. Pointing at Amazon, for example, it took Amazon 20 years before it became a platform. As far as transforming business models, most bankers simply don't have the appetite for that level of change. So a plug and play business that allow multiple providers and consumers to connect, interact, and create and exchange value. This is the second place where we will come into play. It's an oversimplification, but I have said that our Fundability app will become a platform. It's where lenders can put in their underwriting criteria and where borrower data is tracked so that we have a good example of what kind of borrower behaviors that they manifest. And then it's like Match.com. You can swipe through, lenders and borrowers can look at each other and see if you match criteria. That is platform banking. We're going to be more, instead of platform banking, we're going to be platform marriage brokers. We're going to be matchmakers in every way that we possibly can. So those are the things that are creating the most, those are the most misunderstood trends of 2022. And we happen to have a solve for 2 out of the 9. This is Merrill Chandler. Thank you for joining us. We'll keep you posted. Join us next Tuesday at 3:45 Mountain Time, and we'll pick up where we left off today with all of this fantastic information about what's happening out there in the world and what you can count on us to support you. All right.